My friends, I want you to stop whatever you're doing right now, because what I'm about to tell you could literally affect the money sitting in your bank account this month. I'm not here to scare you. I'm here because I care about you, and I want to make sure that nobody takes advantage of you during this confusing time. There is a new banking rule taking effect in 2026 that directly targets Social Security recipients, pension holders, SSI and SSDI beneficiaries, and VA benefit recipients. And most people have absolutely no idea it's coming. I've been getting messages from viewers all across the country and people in their 60s, 70s, and 80s asking me what this rule means and whether it could reduce what they receive. And the honest answer is, if you don't know about this, it could absolutely catch you off guard. So today we are going to sit down together just like old friends, and I'm going to walk you through exactly what this $250 bank rule is, why it was created, who it affects, and most importantly, what you can do right now to protect your benefits and your peace of mind. Stay with me all the way through, because at the end, I'm going to share some smart strategies that could help you keep more money in your pocket. So let's start from the beginning, because I know some of you are hearing about this for the very first time. Beginning in 2026, financial institutions, that means your bank, your credit union, and even some prepaid debit card services, are being required to flag, and in some cases temporarily hold or report transactions involving federal benefit deposits when certain suspicious or unusual patterns are detected around amounts of $250 or more. Now, I want to be very clear here. This rule is not a tax. It is not a cut to your benefits. What it is a new compliance requirement tied to updated federal anti-fraud guidance that was quietly pushed through as part of broader Treasury and Social Security Administration reform efforts. And while the intent behind it is actually to protect seniors from fraud, and I'll explain how in just a moment, the real-world impact on everyday recipients like you and me is something we absolutely need to understand. Here's what's actually happening. The Social Security Administration has been dealing with a massive wave of fraud in recent years. We're talking about billions of dollars being siphoned away from the system through identity theft, fake accounts, and unauthorized bank changes. In fact, the SSA Inspector General reported that improper payments and fraud-related losses have cost the system billions annually. So the government, working alongside the Treasury Department and the Consumer Financial Protection Bureau, developed this new flagging protocol. Any direct deposit of federal benefits, Social Security retirement, SSI, SSDI, VA compensation, pension payments, that is followed by a rapid withdrawal or transfer of $250 or more within a short window may now trigger an automatic review flag at your bank. That means your bank could place a temporary hold on those funds while they verify that you, the real account holder, are the one accessing the money. Now, let me bring this to life with a real example, because I think it'll make a lot more sense when you picture an actual person going through this. Let's say you're Margaret, you're 74 years old, living in Ohio. Your Social Security check of $1,847 hits your checking account on the second Wednesday of the month, just like it always does. 2 days later, you go to the ATM and try to pull out $300 to cover your grocery bill and your medication copays. Under this new rule, your bank's automated system could flag that withdrawal, especially if it doesn't match your typical spending pattern. You might get a text message, a phone call from the bank, or in some cases, your card might temporarily decline. Not because there's anything wrong, not because your benefits were cut, but because the system is trying to verify it's really you. And here is where it gets really important, my friends, because this is where seniors are getting hurt. Not by the rule itself, but by the scammers who are already using the confusion around this rule to their advantage. I need you to hear this loud and clear. If you get a phone call from someone claiming to be from the Social Security Administration, your bank, or the Treasury Department telling you that your account has been flagged under the new $250 rule, and that you need to verify your information by giving them your Social Security number, your bank account number, or any personal details, hang up immediately. That is a scam. The SSA will never call you out of the blue asking for this information. Neither will your bank. These scammers are counting on the confusion and fear this new rule is generating to steal from you, and I am not going to let that happen to you without warning. Now, let's talk about what you should actually do to prepare for this change, because being proactive is always better than being caught off guard. The very first thing I want you to do, and please do this week, is call your bank or credit union and simply ask them, are you implementing the new 2026 federal benefit deposit flagging protocols, and what do I need to do to make sure my account isn't disrupted? Most banks will walk you through updating your contact information, verifying your identity on file, and noting your typical spending patterns so that routine withdrawals don't get flagged unnecessarily. This one phone call could save you from a very stressful and confusing situation down the road. The second thing I want you to think about is your withdrawal habits. If you typically pull out a lump sum right after your Social Security or VA payment arrives, you might want to consider spreading those withdrawals out over a few days or setting up smaller recurring transfers. Again, this is not because there's anything wrong with taking your own money. It's simply about working within the system as it's designed so that you don't trigger unnecessary review flags. Think of it like a smoke alarm. It's there to protect you, but if you're burning toast every morning, you'll want to crack a window. Third, and this is especially important for those of you who use a representative payee, a family member, or a caregiver to help manage your finances, make sure that whoever handles your money is listed and verified with your bank as an authorized person on your account. Under the new protocol, third-party access that isn't properly documented could raise additional flags. So if your daughter helps you pay your bills or your son manages your account while you're in a care facility, please make sure the bank has all of that on record. Now let's talk about some specific dollar amounts and how this might interact with your monthly benefits, because I know that's what many of you are really concerned about. The average Social Security retirement benefit in 2026 is approximately $1,176 per month, following the 2.5% COLA increase that took effect in January. For SSDI recipients, the average monthly payment is around $1,580. For SSI, the federal base rate is $967 for individuals. And for many of our veterans receiving VA disability compensation, payments range from a few $100s all the way up to over $4,000 a month, depending on your disability rating. Here's the thing. None of those amounts are being cut by this rule. I want to say that one more time so it's crystal clear. This is not a benefit reduction. Your monthly payment amount is determined by the SSA or the VA, not by your bank. What this rule affects is the processing and access side, how quickly and smoothly you can access those funds once they arrive. That's why preparation is everything. Now, there's one more group of people I want to speak to directly, and that's those of you who receive both Social Security and a pension, particularly government or state pensions. There's a concept called the Windfall Elimination Provision, or WEP, and the Government Pension Offset, known as GPO. These rules have historically reduced Social Security benefits for people who also receive certain pension payments. Congress actually passed the Social Security Fairness Act at the very end of 2024, which eliminated both the WEP and GPO, meaning hundreds of thousands of retirees saw their Social Security checks increase this year for the first time in decades. If you haven't already confirmed that your benefit was adjusted to reflect this change, please contact the SSA at 1-800-772-1213 or visit ssa.gov to check your account. Some people are still waiting on back payments and don't even realize it. And here's something else that flies completely under the radar for a lot of people. The tax implications of your Social Security income. Up to 85% of your Social Security benefits can be taxable depending on your combined income. That combined income includes your Social Security, your pension, any part-time work, and even some investment income. Now, I know that sounds alarming, but here's the good news. There are legal, completely above-board strategies to reduce how much of your Social Security is taxable. Things like strategic Roth conversions, timing your pension withdrawals, or restructuring where your investment income comes from. I would strongly encourage you to sit down with a fee-only financial advisor or a tax professional who specializes in retirement income to look at your specific situation. Even small adjustments can sometimes save you hundreds of dollars a year. Let me also say this to our veterans watching today. The VA has its own payment structure, and VA disability compensation is not taxable. That's a huge advantage. If you're a veteran who is also receiving Social Security and you haven't explored whether you qualify for additional VA benefits like aid and attendance, or if you haven't had your disability rating reviewed recently, please do that. Some veterans are leaving thousands of dollars on the table every single year simply because they don't know what they're entitled to. The aid and attendance benefit alone can provide an additional $1,000 to $2,300 per month for veterans who need help with daily activities. That is real money that belongs to people who served this country. My friends, I want to close today by reminding you of something really important. These rules, these systems, these regulations, they can feel overwhelming. I know that. But you are not alone in navigating them. You have earned every dollar of these benefits through decades of hard work, sacrifice, and contribution to this country. And nobody, not a confusing bank policy, not a scammer on the phone, not a government form that nobody explained, should be able to take that away from you without a fight. So here's what I need you to do before you close out this video. First, call your bank this week and verify your information is current. Second, check your My Social Security account at ssa.gov to make sure your benefit amount reflects the 2026 COLA increase and any WEP GPO corrections. Third, if you're a veteran, call the VA at 1-800-827-1000 and ask about aid and attendance or any pending benefit reviews. And fourth, share this video with someone you love who might need to hear it. Your neighbor, your sister, your friend from church, because this information is too important to keep to yourself. I'll be back very soon with more updates as this rule rolls out and as we get more clarity from the SSA and the Treasury Department. Until then, please take care of yourselves, watch out for each other, and remember, you deserve to have someone in your corner, and I'm right here.